Hey, I'm Ken. Welcome to Stock Market Unfiltered, where we take a candid look / funny at the stock market. And maybe we can learn something, try to entertain, maybe get some knowledge. I don't know. You know what today is? Today is Casual Country Boy Day around these parts at my house. Yeah, what kind of dress, none of this goes together. You know what I mean? But I always listen to some music and stuff before I come on. And this is a song by Luke Bryan. It's I'm a country boy. Hunting and fishing, loving every day. That's the prayer country boy prays. Hunting. I couldn't bring a gun on. That might be considered a terrorist act. So, hunting, the camouflage hat stands for hunting. But I can bring this on. A little Smithwick Devil Horse. Man, this is a great top order bait out here in North Carolina in some ponds and lakes for big mouth bass. So, hunting and fishing and loving every day of it. But in this case, we're hunting and fishing for stocks. Here we are. And I'm just coming on. I didn't come on yesterday because if you watched my episode Tuesday about all the stuff that was happening this week, especially for the next 3 or 4 days now, it was the great big CPI number yesterday. The stock market was like plus 50 at 8:30. The futures I'm talking about was like plus 50 something. And when they announced that number, kind of like when you hear noise and you run. Or the other day when Pioneer was rumored to be being bought out by Exxon, everybody went by crazy. Well, guess what? The same thing happened yesterday. It happens over and over and over again. And we talk about it on this channel. The CPI was 0.1. They expected 0.2. So that was better. The futures went all like I said, they went to 200 plus points. And then, when they get this number, as I've told you before, everybody is going to digest it, okay? Then you have the core CPI. There's two CPIs. There's a CPI number that was 0.1 that came in a tenth lighter. And then the core, which excludes food and energy. It was 0.4. That's exactly what they expected, 0.4. And then if you extrapolate that over to year over year, that's a 5% interest or inflation, 5% inflation year over year versus 5.1. So all these numbers indicate inflation may be coming down. Sounds great, don't it? Not so fast. Why? There's a little thing called a FOMC meeting, that raises interest rates and things like that. Well, yesterday at 2 o'clock, they released the minutes from the previous meeting. That sent stocks going the other way because somebody was on there being a little hawkish. Now, when we talk about the Fed, there's two types of terms you will hear used. I don't know why they pick birds, but I do. I feed birds. I guess birds are good one. A hawk and a dove. You hear somebody say the Fed was hawkish, and you hear somebody else say the Fed was dovish. What they mean is a hawk is aggressive. Remember the other day I told you about the squirrels that they were up this morning, by the way, wanting some food. And they heard that hawk squawk and they hauled boogie and ran. That's a hawkish attack mode. Then a dove. They're sheepish little birds. They walk on the ground and any little thing scares them. But they are quiet birds. They don't get annoyed too much. They just fly away. So when that happened, it spooked the economy a little bit. Okay. So now how about today? We had something called the Producer Price Index. They expected it to be flat. And the Producer Price Index was actually lower than they thought it was going to be. That's good news. It was minus 0.5 compared to previous month. You know what that is producers charging less money for their product. So if the Producer Price Index is lower, the producers are charging less money to, say, I don't know, Food Line, Harris Teeter, all these people that buy this stuff. And it could be anything from machines to groceries to whatever. So that was down. And now, all the things that are going on in the market, they believe that maybe inflation is cooling. That's kind of obvious to me. If the labor market's tight and there's not as many people out there, well, actually, there's not as many jobs out there now as there are people. That's the exact opposite of what it was not too long ago. So now, if you got more people but less jobs, as I talked about before, the companies can be more picky on who they get, and maybe don't have to pay an exorbitant hourly wage because there's more people but less jobs. So they have more people to choose from. They don't have to be so picky. Right? So I'm trying to break it down for you because you're hearing all kinds of stuff. And then I was watching a report, and like I said, you can talk to one person, they'll tell you one thing different, talk to another, and I've seen this already today. It's driving me nuts. Just making sure it won't go nuts, going to fall from the ceiling. Y'all thought I was going to have nuts falling down, didn't you? Not today. So, they talked about a mild recession is possible because the Fed is seeing that inflation numbers are down, PPI was down, more people, less jobs. So now we're talking about, are we going to have a recession? They've been talking about that for the last year. Is it going to be mild? Is it going to be awful? So now they're trying to digest this. I said, they spend too much time trying to get too many things and go running off on a rampant. Like I said once on my videos, is it a good stock or a bad stock? It's the only thing you want to know. And they have to go through 5,000 things just to answer one simple question. Do your research. If it's making money and it's got earnings per share and it's paying a dividend and you like it, buy it. Simple as that. But anyway, back to the mild recession. And this is why they're talking about this today. Everything's always forward-looking in the future. Nobody knows what the future is. Because if we knew what the future was back on March the 24th, Thursday, or actually the 23rd, whatever day it was, we all bought 1,000 shares of Pioneer Engine. We'd have made $50,000. But anyway, keep going off track here. So the possibility of a mild recession. And that means they think earnings might decline 15% from the companies. Now we've already lowered, not we, the analysts have already lowered earnings for companies. And there are many people on the business news channels trying to say that the market doesn't reflect that lowered earnings. They think we're overpriced at the moment and that all these analysts and me and you and the stockholders and purchasers and this, that, and the other are not taking into account the fact we might have a mild recession. Earnings will be down 15% if that's the case. So they say. I don't know. That's just somebody's opinion. But if it's a worse than a mild recession, the earnings could be down 20%. So if the earnings are down, the companies, when they report earnings, are going to miss their earnings. And then every time they miss their earnings, unless they have forward-looking guidance that is good, 9 times out of 10, the stock will go down. It will. Trust me. I've had that happen to me. They had bad earnings and good outlook, and it went up. And I've had it the other way around. where the earnings report was good. They beat the revenues, they beat the earnings per share, but their forward guidance was light, and the stock went down. That's happened to me too. It's something you don't know. You never know what's going to happen. So, by quarter, I think it's earnings per share per quarter. I think somewhere around quarter two, they expecting something maybe like a minus 2.5%. This is earnings per share, a decrease of 2.5, and somewhere around increase in quarter three of around 2%. But then in Q4, I've seen some estimates, earnings now, as high as a 10% up. In other words, they think the earnings are going to be better than 10%. If the stock market thinks this, that we're going to have earnings at quarter four of this year of over 10%, that's a heck of a lot. Even quarter three, 2%. To me, we're setting ourselves up for a stock market that's going to be let down if we have a recession and they don't meet these earnings. So stay the course. Have a good stock. There's a lot going on. But we'll see. I watched an interview the other day. It was on CNBC News. And the reason I watched it, because they had Warren Buffett on there. You know Warren Buffett? Berkshire Hathaway, however you say that company. He's a rich man anyway. He was up there and said, I'll bet anyone $1 million that, he was talking about banks. I'll bet $1 million and get somebody else to do it. We'll take our $1 million, that'll be $2 million, and we'll put it in a bank or however they were going to do it. And guarantees, he says, in the next year, nobody is going to lose their money if a bank fails or whatever, because, they're still talking about bank failures. $2 million. And of course, he thinks he's going to be right. He said, sure, there's going to be some bank fails. It happens all the time. You might not hear about it. Banks fail every year. You just heard about Silicon Valley Bank because it was such a huge bank. That's the only reason you heard about it. If it's a smaller bank, you're not going to hear about it. So anyway, Warren, I don't know if anybody took him his bet, but the idea is that he was going to guarantee that nobody was going to lose their money. And at the end, that $2 million, he was going to donate it to charity, whichever person won. Okay? So, the FDIC insures these things. At least to $250,000, but he's saying the government will take care of the rest of it. A lot of people don't understand what the FDIC is. The government doesn't pay to have the banks bail out. You know that banks have to pay money to the FDIC corporation as like a fee. It's insurance for depositors. They have to put that money in. So when a bank goes out, it might have been 5,000 banks that put money into the FDIC. I don't know how many banks across America. I'm sure it's a lot. A whole lot more than that. They have to put money in this account every month or every quarter, however they do it. And if a bank fails, the money comes out of that. And that's simple, isn't it? But they make it a whole lot more complicated. But that's basically all it is. All right. So I think we're good today. I just want to come on and talk about all these numbers and what they may mean or may not mean. We'll see. But I can't pass the opportunity. Now, you just on my Easter show, because the Easter Bunny wanted me to talk about Hershey's. And I'm glad I didn't eat this candy bar, because this turned into one of my favorite props lately, because, I don't have all these fancy graphics. I'm sorry. Maybe if y'all can get me to get lots of subscriptions and maybe let me advertise some film, maybe some company will come in and set up a really nice studio for me. That ain't gonna happen. But anyway, this right here is still in play. It's my graphics for being payday. I'm glad I didn't eat this candy bar back on Easter when I was going through getting hungry, showing all these candy bars for the bunny, talking about Hershey Company. This payday's turned out to be nice for me. So let's revisit Pioneer Energy right quick, and then I'll mention one other thing, and then we'll call it a day. Because I'm up here, let's see, what is this? It's about 1:30 in the afternoon on the East Coast. I got a road trip ahead of me today. Got to go pick up some things, a couple-hour drive, a couple-hour back. So, but it's a great day in North Carolina. It's 79 degrees. Great, feels good. Well, sorry about that. Pioneer Natural Resources. It, at the moment, at 1:30, is $228 and $228.35. Thank you, Exxon. Thank you, Wall Street Journal, for the rumor that's not confirmed that they may or may not buy it. And then thank you to the CEO for Pioneer saying we might be interested in selling it, but not at $220. If it keeps going up, I'm going to have to sell some. I hate to do that, but because in my portfolio, I'm looking at it live. Let's see if I can get it up. You just bear with me just a minute. Well, it's not really the one I'm looking for, but PXD. There we go. It's $5,000 above my set limit for my individual stocks. So that's making this stock in my portfolio increase. And I told you I don't like to have I don't like to really have over a 5% stake in any company that's in my portfolio. But this one obviously is much higher because of the increase in the run-up. I'm trying to see if I can switch to another, I don't know if I can or not, but we'll see. I'm just going to try it while we're talking about it. Because I was talking about balance on your portfolio. I don't want to really sell it because I think the stock, as I said the other day, I think it could go to 280. I think it should be at 280. I think it deserves that price. It's just my opinion. Nothing wrong with my opinion. Yes, here we go. All right, I found it. I just had to get to another screen on my portfolio. Pioneer is now 11.68% of my portfolio. Why? Because it's gone up so much. You remember it was $200, we'll just call it $278 to keep it even. And now it's $228. It's gone up $50. $50 in less than 15 trading days. $50. That's a lot. And I thoroughly expected profit taking to come in, but the profit taking hasn't happened yet. It might happen tomorrow, I don't know. But right now, and I want to tell you the same thing today as I told you the other day when I was up here on Wednesday. I'm going to stay the course. I'm keeping an eye on it. I may sell, and rephrase it, I may trim some of the shares in Pioneer Natural just because it's gone up so much. And I may not. We'll see. So that's my take on Pioneer. It's doing really good, and I'm glad it is. And one more thing we're talking about, since tomorrow is Friday. I might have to come up dressed up tomorrow. This is kind of like, this is what you call, like I said, the country boy casual day. A t-shirt, a nice coat, and a stupid camouflage hat with none of this matches. But I'm feeling casual. Yeah, he's just being funny. Maybe you'll learn something. Maybe learn something about PXD and what I'm doing in my portfolio. I told you I may trim some shares because it's going up to 11%. The value of PXD is 11% of my portfolio. That's too much. I'm going to have to balance it. But if it keeps going up, I might just have to take that. And I can always put a stop limit on it. And when it goes down and get a high price, and say it goes up to 235 or something, or 233, and all of a sudden it starts going down too, I can just put a stop limit at $230 and trim some of my shares. I might do that. That might be a better idea, by the way, for me. All right. Tomorrow is Friday. Friday. I hope everybody's got some plans for the weekend. Looking for cooking out, looking forward to being with some friends. well, just, I don't know, whatever you got planned on doing. So, hopefully, you'll have a good weekend. I hope it's going to be a good weekend here in North Carolina. I was looking, I don't quite remember all the banks because I don't have it popped up there on me. I probably could, but anyway. Tomorrow's Friday, and we're in earnings season. And that's another term you may hear. Earnings season. That puts the market in a frenzy also, so be careful for the next 2 months. Earnings seasons is January and February. That's when a lot of companies, most of the companies in the stocks that trade, report. And then there's a break in March. Everybody kind of has a break. And then it starts over, April, May. And we get a break in June. Then in July and August, and so forth and so on. And we're in earnings seasons, as they call it, which is 2 months long. It starts in April this year, April, and in May. Because all these companies are going to report earnings, and it's going to give analysts and everybody else how they think the economy is doing, how's earnings doing, and they just pick it and look at it and dissect it 10,000 ways, as I've said before. If you have a good company and you make your own decision, don't let all them analysts tell you this and that, and sometimes they're right and sometimes they're absolutely wrong. But tomorrow we have 4 or 5 banks reporting. Then we have Goldman Sachs and Bank of America next week, along with TFC next week. And Wells Fargo reports tomorrow. JP Morgan Chase reports tomorrow. There's a couple more. I don't have that right in front of me yet. So maybe I need to come on and actually be dressed up again. Coat, tie. I don't know. But anyway. I always say that, but anyway. It's a habit. It's because, usually when I say it, it's because I've gone off track and I just had to stop and say, anyway. I'm sorry. It's just me. I'm just a country boy. I'm a common sense person trying to help you guys make sense of the stock market. You're not going to get a bunch of technical crap. I'm taking a look at it from a common sense. And speaking of PXD from a common sense point of view, it's $228.40. And common sense tells me it keeps going up and keeps going up, and they haven't sold it. I'm going to stay the course and watch it a whole lot more closely than I was, because it's going up. And if I see it going down, I'm going to trim some of my position and lock in this high profit. Remember, my cost basis was $213. And we're at $228. I'm $15 above my cost basis. And I have quite a few shares. Good for me. So financials are going to be in play tomorrow. And I want to let you know about this too. There's 4 or 5 of them reporting tomorrow. One of them might be a great report. 2 of them might be a great report. And 2 might be bad. Or all 4 of them might be good. Or 1 might be bad and 3 might be good. You never know what's going to happen. But my point is, those banks that report tomorrow may set precedent for the next banks that are going to report. It is human nature. On the stock market, if one bank does this, all the banks must be that way. That's not true either, because all the banks have different investments. They operate in different parts of the country, and they do different things. And banks will move on other banks. It's like, they call it sympathy effect. Let's say Wells Fargo has a bad number, and they'll say, all the banks are down in sympathy with Wells Fargo. You know what that means? If they are all down because Wells Fargo is down, that means the other banks are down because Wells Fargo is down. They're not down for bad news from that bank. They're down from bad news from Wells Fargo. And that's just an example. I'm not trying to shoot down Wells Fargo. It's a good bank. It's a good time to buy something, probably. So that's why I want you to stay the course. You want to see some banks that have good earnings and some that have bad, and some that are bad may affect more and more banks. Let's say TFC is a regional bank. Let's say TFC, not specifically, but another regional bank reports something bad. I would guarantee you that is going to filter down to TFC, and that stock's going to go down in sympathy with the other regional banks. You got to remember, we got regional banks and national banks and big banks. So we'll see what happens. So we'll stay the course. If I think I'll come on tomorrow, I will come on tomorrow. If not, I may just come on the weekend. We'll see what's happening. Because I have to digest all this news from these financials and see what's going to happen. If it's something you guys might be interested in, might give you a buying opportunity if you particularly like a stock. I'm not going to give you a stock and tell you to buy it. I will suggest it and tell you why I like it for my portfolio. The way I handle my portfolio may not be the way you handle yours. So, again, I will never tell you to buy a stock on this channel. You can say, well, you suggested it, Ken. You said you like it. I said, yeah, I can understand that. I can understand that if I like it. You can say that's suggesting. That's like telling me to buy it. No, suggesting it and telling you that I like something is not telling you to buy it. That's just my opinion for my portfolio, okay? Because I'm in it to do dividends, as I said. So we'll see what happens. You guys have a great Thursday. Hope you have a great weekend. I'm looking forward to about another hour and get ready to go on my little 2-hour road trip. And the time I get back to the house, probably 9, 10 o'clock at night. But I love a road trip. That's what country boys do. We do a road trip. Look, thanks for listening. Have a great day.